Hey, welcome back to the program. Show's called Your Money, Your Wealth. My name's Joe Anderson. We're talking taxes today. End of year tax planning strategies that you want to make sure that you do before year end. You still got a couple of weeks to save a lot of money. Or let's go to the true false. Let's just go to the true false right now.
That is a great idea. If I convert $50,000 from my IRA to a Roth IRA, I'll pay tax on that amount, but all future principal, income, and growth will be tax-free.
Yeah, well, that's absolutely true, Al.
That is true. And I will tell you something, this is really one of the best techniques, or best strategies, I should say, that the IRS has given us in years. And so here's the strategy, which is you can take some of your IRA, 401k, 403b, and you can convert it to a Roth, and that just simply means you take it out of your regular retirement account, put it in a Roth account. A Roth account grows tax-free. All future growth, income, and principal is tax-free. Anybody can do it, and a lot of people don't realize this. 2010, they took the income limitation away so that anyone can do the conversion at any income level. It doesn't matter how old you are. It doesn't even matter whether you're working or not, and you can do any amount. You can do the whole thing, or you can do part of it.
And one of the biggest things with that, it's called tax diversification, right? So if you think about your portfolio, right, you have stocks and then you have bonds. And so stocks do very well, right? Then you're like, man, I wish I didn't have bonds. I wish I had everything in stocks. If stocks go down, you wish, man, I wish I didn't hold all these stocks. I wish I had bonds. Same with your taxes, because what we're finding is that all the money that is held for your retirement in most cases are sitting in a retirement account that will be taxed at ordinary income rates. Wouldn't it be nice for you to grab a little bit of money tax-free? So the concept is called tax diversification. Even though you're paying a little bit more tax now, but you're even out the tax burden or potentially reducing your taxable income significantly when you need the money the most, and that's in retirement. Let's go to the, you know what, let's just jump into the emails. We got a few emails. We haven't answered a ton of emails lately, so let's go to the email questions. What's the first one?
Yeah, the first one is from Pete in Vista. He says, I have a landscaping business that is showing good profits this year. What are my options in setting up a retirement plan for my business?
Well, there's a lot of things right now.
There is a lot of things, and let's just jump right in. The first thing you can do is what's called a SEP IRA, Simplified Employer Pension Plan. This is something where you can contribute up to about 20% of your income or 25% of your salary if you're incorporated. That's the easiest one. You can set that up all the way into the filing date of your tax return next year. Some of these other plans, like a simple plan, 401k, defined benefit plan, need to be established this year. A couple of them are too late already. The simple is too late, regular 401k is too late, but if you have a business that has no employees, you can still set up what's called a solo 401k for yourself by December 31st and get a lot of money into it. Same with
if you're a small business owner, I would highly encourage you to take a look at the solo 401k, because you can set up your own 401k plan. That's why hence the solo 401k.
Right.
There's not a lot of costs, there's not a lot of fees, there's not a lot of expenses to this, but you can shelter a lot more money into the solo 401k potentially than you can in the SEP plan. The defined benefit plan is the grand poobah of them all, that you can shelter several $100,000 away. So you just want to take a look at how much money that you want to shelter. If it's about $50,000, then the defined contribution plans is your best bet, such as the 401k, solo 401k, SEP plans. If you want to shelter a lot more money than that, then you want to look at the defined benefit plan. But you have to still do it before year end, so you got a few weeks to get it done. Let's go to the next question.
All right. I've heard that you can invest in oil and gas ventures and receive a huge tax benefit. Can you comment on this? This is from Calvin in Rancho Santa Fe. And the answer to that question is yes, you can do that. Many of these ventures, they're private ventures drilling for oil. You invest $100,000, you may be able to write up $70,000, $80,000, $90,000 all in the first year. But be careful, these are not necessarily the best investments. But
it's wildcat, right?
Yeah,
it's very, very risky, highly speculative,
yes.
And you have to be an accredited investor. So this is not for everyone. So I guess to answer your question, just from a compliance standpoint, yes, it will give you a tax deduction, but be very, very careful going into these type of investments, because in most cases, it really potentially can help the agent that's selling it to you, because they talk about these great tax benefits and also these great returns. But be very, very careful when it comes to those types of speculative investments. Hey, that's it for us today. Hopefully you enjoyed the show. Next week, we're still going to dive in. There's still more strategies that you can do before year end, so we want to give you some more tidbits before it's too late to put more money back into your pocket. It's the best give you can give yourself, right? Less money to Uncle Sam legally right? It's not tax evasion, it's called tax avoidance, and we're trying to give you all the tools and the nuggets that you need to avoid your taxes as best you can. You just have to understand the law, and that's what we're trying to do. Thanks for joining us. For Big Al Clopine, the big man, my name's Joe Anderson, and we are done. You just watched Your Money, Your Wealth. We will see you again next week. Have a wonderful weekend.